This is the Times Television Network, and you're watching ET Now.
Welcome our guest this evening, Michael Van Dulken. He's the head of research at Ascendo Markets, joins us from London. Michael, good evening. Thanks a lot for joining us. Let's talk about crude oil prices for a moment, or let's start the discussion with that. Prices have staged a bit of a comeback. In fact, from the recent lows, they've risen about 29%. But a spanner in the works seemed to be the International Energy Agency's commentary. How are you analyzing it?
The IEA report suggests seeing output remaining high. I don't think we should really expect a plunge as such. I think we're expecting growth to slow off, which is a natural result of the low price squeezing out certain projects, the higher price shale and fracking. So I think the report is headed in the right direction in terms of a correction to what is being produced and the levels. The comebacks come about thanks to the ECB QE, hopes of stimulus from China, these rig counts in the US dropping, the oil majors cutting their capex projects. All of these things are giving the message that, okay, we're adjusting to a lower oil price. And that's made us believe that supply will tighten slightly in the future. So we've had a bounce, but I'm expecting pretty slow step changes as we move forward. It's already, as you said, been a pretty big move to the upside. I'm certainly not expecting it to run away, but we're obviously seeing the world have to deal with a lower oil price. And I think the reports are showing, slowing growth is the natural reaction to the lower price. And so I don't think we should expect anyone to... It's a game of chicken, if you like, between the US and OPEC. I think we're seeing the US adjust, and that's quite rightly so. But it's all eyes on which one really makes a big adjustment. But it looks like the US has moved first, while the OPEC has stood strong.
Mike, you're also seeing markets today move higher, at least on Wall Street, on some sort of buzz that the impasse between Greece and its creditors will resolve itself. How are you reading the situation? Do you believe that a Grexit is inevitable, or there will be some compromise?
I don't think it's inevitable. We've kind of been here before, unfortunately. Don't forget that the new ruling party in Greece, it got elected because of a very strong stance. Now it has to at least try and stand firm on its beliefs, make a good effort in front of the Troika as to getting what it proposed in its mandate. However, then Europe also has to show that it's not willing to just keel over either. So I'm fully expecting the negotiations to be pretty long, protracted, and likely go right to the wire. The real deadline now is the end of Feb, so we could be looking at Greece needing a bridge loan to tide over until June. So I'm fully expecting things to, the slog to continue, unfortunately, like as it has done in the past. Maybe we don't really have, Greece doesn't really have the luxury of putting too much pressure on Europe, because I'm not sure we have such a risk of contagion this time. Then again, I think it does have to make an effort, but it has to be careful how far it pushes the international creditors.
Let's talk about then the Fed. And is it looking likely that the Fed will hike rates anytime this year? Are you factoring in a mid-year move?
Not quite mid-year. It wouldn't surprise me if we get it, but likewise I wouldn't be surprised if we see a delay more towards the back end of the year. We've seen it in the past. The Fed talks us up to be well prepared, but it has the luxury of monitoring so much data that it can focus from one meeting to another on certain data points and then almost change what it is looking at. We've had very strong jobs data on Friday, and that would suggest that we could be on the path to a tightening very soon, possibly even June. But then again, it may look at the inflation that might top the kind of wages growth and the jobs being very rosy and lead them to delay a bit further. We've already had a big rally up in the dollar. That may well be creating a bit of a headwind for some of the US companies. So maybe it will use its luxury of being able to delay a touch longer. So I wouldn't be surprised if we see something towards the second half of the year rather than mid-year itself.
Mike, the dollar index has been gaining ground for several months now, almost nudging the 95 kind of a mark. Do you think, should the rate hike starts this year, could that level even gain more ground?
We've had the run-up on the expectations of a rate hike. I think those expectations may well heighten, they may well taper off a bit. But where the dollar is, don't forget the dollar is just, or the US element of the dollar is just one half of the story. We need to keep an eye on Europe. Could the euro weaken further, which is going to strengthen the dollar? Could we be talking about the UK delaying its own rate hike, which could potentially weaken sterling, which strengthen the dollar? So that's only one half of the story. But I think the dollar is likely to remain fairly strong for the immediate future. But as we, if we see a removal of the word patience in terms of language from the next Fed communication, that could well suggest that we're very much closer to a rate hike. That could see the dollar strengthen yet further.
All right, Mike, we'll let you go on that one. Thanks a lot for joining us on the show this evening.
This is the Times Television Network, and you're watching ET Now.